Hello and welcome to UK Property Accountants. My name is Chirag, an analyst here at UKPA. Joining me today, we have one of our experts, a senior associate in our tax team, Prasun Shrestha. This is the first part of the video series on VAT on property, a comprehensive topic which Prasun will help break down for us. So Prasun, why don't you tell the viewers what part of VAT we are taking a look at today?
Hi Chirag, nice meeting you again. Like you've rightly mentioned, VAT on property is quite comprehensive topic, and today in this part of the series, we would be discussing on VAT implication on the residential property.
What exactly are these implications of VAT on residential properties?
So while dealing with the residential property transaction, if the residential property is renting of residential property, then in that case the landlord does not have to worry much about the VAT implication, because renting of any residential property is exempted from VAT. That's why the landlord will not charge any VAT to its tenant on the residential renting that is they are carrying out as a business operation, and that's why the tenants do not pay VAT, and at the same time the invoice that is issued by the landlord does not include the VAT as well, since the transaction is basically VAT exempt.
And you mentioned about exemptions of VAT. Are these exemptions similar for service accommodations like Booking.com and Airbnb?
From a service accommodation point of view, it is not quite typical as residential renting, but rather it is considered much more as a holiday lets, and it is considered to be similar to hotels and other establishment business operation. So while dealing with the renting of a service accommodation, it is actually a taxable supply, hence the VAT is charged at 20%. So if I am carrying out a business operation where my property is being rented out as a service accommodation in, let's say, Airbnb and Booking.com, then this is not considered as a residential property renting and exempted, but rather this is considered as a similar to hotel industry, and I should be charging VAT to my customer, to my guest basically. So this is how it is different from traditional residential property renting and a property rented via Airbnb and Booking.com as a service accommodation business.
When it comes to dealing with service accommodations, I've often come across the topic called TOMS, or Tour Operators Margin Scheme. Could you please further elaborate on this for us?
So tour operators margin scheme, TOMS, is basically applicable in industry where the supplier is acting as a tour operator. And how this has been in connection with service accommodation industry is the service accommodation supply. Basically, the supply of accommodation is considered as a margin scheme for a TOMS point of view. So assuming that all other basic criteria for tour operators margin scheme is fulfilled and satisfied, any business operator who is carrying out service accommodation renting on an online sites, Airbnb, Booking.com, may potentially be eligible for TOMS and may have to account for VAT under a special scheme, that is tour operators margin scheme.
We just talked about VAT implications when renting out residential property. What about when development or trading comes into play? How does VAT exactly work?
From a residential point of view, when there is a new residential property development project, so for a developer, any of the new residential property that is being developed and sold is zero rated. So that is how it is different from residential property renting, which was previously, like we have discussed previously, which was exempted. So if I am a new residential property developer, and once I have developed a residential property, my sale of that residential property would be considered as a zero rated rather than exempted, and zero rated and exemption is different from a VAT point of view. So how does that differ is, since my sale is zero rated, the VAT that I may have paid during the process of residential property development, there could potentially be an input VAT or reclaimable for me as a property developer. And from a property trading, when there is a residential property trading and that is not considered as a new residential property, like residential property renting, that is also exempted. So if I have acquired a residential property and that is not developed, I simply use it as a property trading, and if I sell it, then I don't charge VAT to the seller, and at the same time sorry, I don't charge VAT to the buyer, and my seller also does not charge VAT on it. So that's why it is similar to residential property renting.
Earlier, we talked about how VAT implications for new residential property developments is zero rated, whereas when it comes to renting out a residential property or property trading, the VAT implications are 100% exempt. What exactly is the difference between the two?
Chirag, as it may sound that it could be a similar, being considered as any transaction being considered as zero rated and exempted, but from a VAT point of view, there is a significant difference when a specific transaction is zero rated and when the other transaction is exempted. So when I am acting as a property developer and I'm building a new residential property, since my sale would be considered as zero rated, this is a taxable turnover. So that means any of the VAT that I have paid during the process of residential property development, I can claim back the input VAT on that. In contrast, when we are talking about residential property trading or residential property renting, since these are VAT exempted, any VAT that I may have paid during the business operation of residential property trading and residential property renting, I cannot claim the input VAT on the expenses where I have paid the VAT.
And then, lastly, we've talked about tax implications of VAT when dealing with renting out residential properties or trading or development of new residential properties. What about when property conversion comes into play?
So when there is a property conversion, right? So there is few areas that we need to be careful about. So what exactly is property conversion is one question that generally that is primary to answer before we talk from a VAT point of view. So from a property conversion, the converted property should result in a residential property. So that is one primary important. And another thing that is important is the number of the residential property that is being created as a result of conversion should be different than what it was in the before the conversion. So if I have a commercial property, let's say, and I am carrying out a conversion, and that results in the creation of residential property, then this is a qualifying conversion, and this transaction is a qualifying property conversion, and the VAT would be charged at 5% on specific transaction. So this is a qualifying property conversion. But when I am converting a already residential property and that is being converted into a residential property, but there is no change in the number of residential property. So if I have a one bedroom residential property and I am converting it as a new one bedroom residential property, then this is not a qualifying conversion, and there is no scope for reduced rate of VAT, that is 5%. So the contractor would charge you 20% on the qualifying expenditure.
Thank you so much, Prasun. On today's video, we took a look at VAT implications on residential property. Stay tuned for the next part, where we'll be taking a look at VAT implications on commercial properties. See you next time.